For more, let's bring in Gerard Cassidy from RBC Capital Markets. Mike Santoli still with us as well. Gerard, you're seeing the major banks up more than 2% across the board. No surprise, certainly, as investors are anticipating some of that capital to be returned to shareholders. How quickly do you think banks could get started doing that?
I think they could get started right off the bat. I mean, this is really good news the way your colleague reported it. None of us were really expecting the banks to be given permission to go back into buying their stocks. So we could see that in the first quarter of 2021. And that's been one of the real missing points to the bank stocks is their ability to go in and buy back their stock.
What's it worth, Gerard? I mean, we're seeing 2-3% moves here after hours. Could it be one of those sort of longer term tailwinds that gets banks up? They're still way underperforming the rest of the market for the year.
No, you're right. The year to date, the performance has been really awful for the banks. However, since the first announcement of the Pfizer vaccine, the bank stocks have outperformed the market almost by a double. And now with this news, it's even better. So it is a long tail. The banks, as you know, under the new stress tests, they don't need to get prior approval for their share repurchases. So they have capital action plans that they will start to enact. As long as their capital levels are above the required minimums, they're able to buy back their stock and also pay a dividend. So I think this is going to be an ongoing measure throughout 2021, which is one of the reasons the banks should be owned as we see the credit recovery kick in, earnings recovery comes, and now we have the buybacks, which were not expected.
Gerard, it was interesting to see Charlie Scharf of Wells Fargo say in recent weeks that he wants to buy back stock. Of course, Wells Fargo has been under the thumb of regulators because of its cross-selling scandal for the last several years and trying to reform the culture at the bank. I know the Fed this time around ditched the pass-fail dynamic of this test, so they really just want to focus on the actual numbers behind these tests and not calling out any specific names. But do you think that from what the Fed used to call a qualitative perspective, that there are any companies that still have more work to do to be able to meet some of those demands?
I think they've all met them very well in the last test and in this test. As you know, Governor Tarullo, under the Obama administration, has put into place the new exams that the banks are using. And so I think what everyone has discovered is that following the financial crisis, the recapitalization of the industry, the annual stress tests have worked very effectively. And as we've seen in this downturn, which was dramatic, they've gotten through it very effectively.
Mike, your thoughts as we see these banks after hours now surging more than 3% apiece? Clearly, this was weighing on them.
I think for sure investors did not bank on them being able to do this, which is net positive. The other broader takeaway is that this is another way that the impact certainly on the corporate sector and even on consumer finances in general of the pandemic, of the shutdown, of the downturn was not nearly as severe as many had braced for going into, let's say, the third quarter and the fourth quarter. We have this sort of cushion out there that perhaps we didn't think we were going to have. It shows that the credit losses are not expected to really worsen from here. And arguably one of the bull cases for bank stocks next year, too, is that maybe they're going to prove to have over-reserved for credit losses, and they can release those, and that can go into investment and buybacks as well.
When you talk to a lot of these executives privately, though, they won't say this publicly because of all the public kvetching that they did about the stress tests right after the last crisis. But they attribute these stress tests as the single most important reason that they were able to help other sectors recover from this crisis and not need another economic rescue themselves. Take a look at those stocks and you can see why. Gerard Cassidy, our thanks to you for your expertise and perspective today.
Shepard Smith here. Thanks for watching CNBC on YouTube.